Are payday loans bad for your credit score? There are a number of considerations before determining whether payday loans are bad or good for your credit score. It's often dependent on what your score already is and your immediate financial situation. Let's have a closer look. 1. Credit rating bureaus. Out of all forms of credit, payday loans have the least overall impact on your credit score, good or bad, because of their relationship with the credit bureaus. In the U.S., there are 3 main bureaus: Equifax, Experian, and TransUnion. Most major lenders will use these when they do a credit check. Payday loan lenders, however, tend to only report to the smaller bureaus that are often overlooked, so the details about your loan may never be discovered by other lenders. This means a payday loan will have no impact on your credit score at all. 2. Payday lenders don't do credit checks. Usually, when you apply for a credit card or personal loan, the lender will run a credit check to determine whether you're a lending risk or not. In the process, this will be recorded as an inquiry, which is a message to other lenders that you've been seeking credit. If you go through a period of making several applications for credit cards, loans, etc., lenders will start to get the impression that you are desperate and therefore might be in a bad financial situation. Payday loan lenders, however, do not usually perform any credit checks, so they leave no inquiry behind and no immediate record that you've applied for the loan. So any negative result that might come from an inquiry does not apply. 3. Don't apply before applying for a mortgage. Where payday loans can have a negative effect on your credit rating is when applying for a mortgage. They are some of the strictest lenders out there and often interpret the fact that you took out a payday loan as a sign that you've been in financial trouble. The rationale is that if you were a respectable borrower, you wouldn't have to rely on a payday loan. Of course, if you have a great credit rating overall, this is likely to have a negligible impact. On the flip side, if you have bad credit, you probably aren't looking for a mortgage anyway. 4. Repayment is a positive sign. If you do have a bad credit rating, taking out a payday loan and repaying in full on the agreed upon date will at the least have no impact at all, but at best will be a positive. This is because you've demonstrated to other lenders that you can meet terms and make repayments on time. 5. Defaults are a negative sign. Likewise, if you default on a loan, the best you can hope for is no effect, but most likely it will be recorded on at least one of your credit reports, meaning some lenders who do thorough credit checks may take it into consideration and deem you a lending risk. Even if the original payday lender doesn't pass the information on to the big 3 credit bureaus, if it gets to the point where they pass it on to a debt collection agency, they may do. So overall, payday loans will not harm your credit rating unless you're going to be applying for a mortgage shortly after, and as long as you make the repayment, it can actually help rebuild your rating if you already have a bad score.